some of the other changes coming through in 2014. Of course, an important one, and I don't propose to go into this in a huge amount of detail because I'm sure at this stage you've probably covered everything on the employment tax incentive, but just remember that this incentive is one of the changes that has come on stream this year. In fact, it kicked off 1st of January, so we saw companies claiming the incentive as a credit against the PAYE that they have to pay to SARS. They claimed that for January when they submitted their EMP 201s on the 7th of February, and February they would have submitted 7th of March. When the Minister made his budget speech on the 26th of February, he obviously had already obtained the information from SARS that told us that 56,000 people had benefited from this incentive in the first month, which is a substantial number, I think far more than many of us had anticipated. But it doesn't mean to say that this is indicating that we've had this massive increase in jobs and job creation, etc. If one looks reasonably, 1st of January often is a time of new take-ons, interns, learnerships, etc. So I'm not saying that it's all going to fall away again. Obviously, it should be sustained, but you're not going to see that same uptake month by month by month. Obviously, as long as these qualifying employees are on the system, the employers will keep claiming the incentive because you claim the incentive for up to 2 years on each particular qualifying employee. The incentive itself is available for 3 years, for 2014, 15, and 16. But in any particular employee, you only get the incentive for up to 24 months. Okay, and the issue is, just very quickly, eligible employers obviously have to be registered with SARS. Please also remember that eligible employers means that you must be paying the minimum wage, or if there's no minimum wage, not less than 2,000 Rand per month. You must not have displaced an older employee and then brought in a younger person to qualify as a qualifying employee. And your tax affairs must be up to date. And I'll come back to this later on, because if you claim the incentive when your tax affairs are not up to date, you are going to end up facing a penalty. As far as your qualifying employees are concerned, remember SA citizens, SA ID document, refugee status. I've mentioned about the minimum wage. 18 to 28, a lot of people ask me why didn't I say 29? Because it is a bit misleading to say 18 to 29, because actually it says that once the person is more than 29 years old, you're no longer a qualifying employee. That means the month in which the person turns 29, they're no longer a qualifying employee. All right, so just be a little bit careful about that. If you're talking about inclusive, it's 18 to 28 inclusive. Once the person turns 29, they're no longer a qualifying employee. They can't be a connected person, can't be a domestic worker, and they must have been employed since 1st of October 2013. And then, of course, you work out your incentive according to this table, and you'll see for the first 12 months, second 12 months, so the incentive basically halves in the second 12 months. And that table has the effect that your incentive, depending on what you're paying the person, your maximum incentive is 1,000 Rand per month per qualifying employee. And that's if you're paying the person between 2,000 and 4,000 Rand per month. Once you start paying the person more than 4,000 Rand and you start using the formula, then your incentive drops down. And at the point where you're paying 6,000 Rand a month, there's actually no incentive. The incentive works out at 0. Okay, I've given a couple of examples here. I don't think we really need to go into this in a lot of detail, but basically just your remuneration less than 2,000 a month. Obviously you're working on 50% because they're only in the second month of employment. This remuneration of 5,200, you're working on the special formula. They're in the 14th month of employment. So you've got the formula basically half of what it was for the first 12 months. So in this case, you would get an incentive of 1,100 Rand for the month. So the employer would claim the incentive against their PAYE. I think what is probably of more relevance at this stage is to have a look at a situation that represents a more sort of real life scenario for a smaller business. Because the question often arises, what if my incentive exceeds my PAYE for the month? What do I do then? Obviously, I think we all understand you're not going to get a payback from SARS on a month-by-month basis. That's not going to happen. But if we take this example, where basically you've got a small amount of PAYE, 2,000 Rand a month is the normal PAYE bill, so we should be paying that to SARS. In January, we took on one qualifying employee, and we get an incentive of 1,000 Rand a month for him. In February, we took on a second qualifying employee, another 1,000 Rand, so we're now getting an incentive of 2,000 Rand a month. And then in March, we take on a third employee, and we're getting an incentive of 500 Rand a month for that third employee. So when we get to March, we see that our monthly incentive of 2,500 is exceeding the PAYE we should be paying to SARS. So now we end up with a credit. Now the issue is that you're not going to be able to get that 500 Rand paid back from SARS immediately, but you don't lose it. You carry the 500 Rand excess through to the following month. And each month, assuming that this stays exactly the same from March all the way through to August, so every month I've got PAYE of 2,000 and I've got an ETI of 2.5, I've got the surplus of 500. So over 6 months, that surplus, that credit, is now sitting at 3,000 Rand. So that 3,000 Rand I will claim back when I do my EMP 501 reconciliation, the PAYE reconciliation, for the 6 months that ends end of August. And remember, that will probably have to go in by the end of October. By then, SARS should be ready, the Minister tells us, with their refund system, and so you then should get your 3,000 Rand paid back to you. Okay. So at the moment, if you had an excess in January, February, because yes, of course, the end of February is the end of a reconciliation period, all right? But at this stage, SARS is not they don't have a system to refund you that excess. So what you would just do is you would carry the excess forward into the second 6-month period. There is facility for you to do that. You won't lose it. So you just carry it forward. But by the time you get to the end of August, then we would need to sort out the excess with SARS and get it paid out. Okay. Any other questions? I think easier just to deal with this on an exception basis. Yes?
Sorry. 2 questions, really. The legislation says, in the initial legislation, they will decide which industries this will apply to. Is this now blanket to everybody now?
Yes, so which industries does it apply to? It's open-ended. It doesn't matter which industries, except it must be in the private sector. That's the issue. And if you have a business in a special economic zone, then you just it's slightly more lenient in that it doesn't matter what age your employees are.
But they haven't disclosed yet what those economic...
Yes, I'm going to come to SEZs just now, yeah. It's a bit of a pipe dream at the moment, but when we get them, yes.
Okay, the second question is SARS paranoia about people cheating on this sort of thing. What red tape's in place for them to check on?
Okay, so yeah, because obviously I think it stands to reason, especially when you see the level of audit and checking that goes on by SARS, etc. It stands to reason that they're going to be checking these ETIs that people are claiming. All right. Now, what they would be looking for is to make sure that whoever you've claimed the ETI in respect of is a qualifying employee and you've got your amount correct. If you're using a computerized payroll system, that should be pretty simple. But of course, it's always a case of garbage in, garbage out, right? Okay, put the right information in, you'll get the right result coming out at the end of the day. So just important to make sure that you are eligible, that you have a proper qualifying employee, and that you're calculating the amount correctly. That's what they'll be looking for. And if you've calculated the amount incorrectly and you've claimed too much incentive, then what's going to happen is that you've effectively underpaid your PAYE, so you come back to your 10% underpayment penalty. And that underpayment penalty is also going to happen if you've claimed the employment tax incentive when your tax affairs are not up to date. So if you claim the incentive and then the next day you get a phone call from SARS saying, you know, we're missing your VAT form from July 1993 or whatever the case might be, then unfortunately they're going to come back and say you shouldn't have claimed that incentive because your tax affairs are not up to date. You've overclaimed, there's a 10% penalty for underpayment. I mean, that's a bit of a silly example. Hopefully you're not still getting those kinds of queries. Okay, not such a silly example. Okay, on displacement, of course, the issue is there's quite a severe penalty on displacement. That's if you fire your older worker, unfair dismissal, and then hire a young one between 18 and 28 so that you can get the incentive. Because one of the big concerns of the trade unions is that you're going to have exactly this type of thing happening. So to protect the situation and to make sure that the trade unions were satisfied, not that they were entirely satisfied, we still had them fairly negative around the ETI, but this was a little bit of a sweetener that was put in for them to say there'll be a 30,000 Rand penalty if you're found guilty of unfair dismissal. And this is a penalty that you're going to be paying to SARS. This is apart from any CCMA problems that you might have on unfair dismissal. Furthermore, the minister could say you don't get any further employment tax incentive for any of your employees. So it really is a bit of a gamble to go down that road. And then if you're paying anybody below the minimum wage, remember that they're only a qualifying employee if they're receiving the minimum wage. You are only eligible for the incentive if you are paying at least the minimum wage or more. So if you pay someone below the minimum wage and then claim the incentive for that person as if they're a qualifying employee, it's not just a case of you shouldn't have claimed the incentive, you've underpaid your PAYE. It's actually a separate 100% penalty on the ETI for that particular employee. So that's also a bit of a nasty one. Okay, so just be careful of those penalties. I think it's still early days, you wouldn't have seen any of those penalties coming through, but further down the line, I'm quite sure we're going to see quite a few people facing, especially claiming the incentive if your tax affairs are not up to date. It's just...
Union problems.
Yeah, and union...
I promise you.
Yeah, and union problems, yeah. Okay. All right, so let's have a look at some of the other amendments. Also, sort of...
Would you suggest that we do that?
Pardon?
Would you suggest that we apply for these?
Oh, in terms of applying, do I suggest you apply for the ETI? Certainly. Certainly, why not? You know what? I mean, if you're eligible for the ETI and you need to employ people and you can benefit from it, certainly I do think so. It's not as much admin as people think it is, you know. And if you're running a computerized payroll system, it should be really easy to identify this is a qualifying employee. And I know you're shaking your head. Is it more complicated than what I'm...
This qualifies within 24 hours.
Pardon?
If you employ a person, I think it's something like 24 hours a month.
Yeah.
That are full-time employed.
Okay, but full-time employee, remember you don't have to have a full-time employee for the incentive. You just have to employ somebody. They must be an employee and you're paying them remuneration. So, I mean, as long as they're not an independent contractor, you could be employing a person, let's say, for argument's sake, 1 day. But that's not going to give you much of an incentive, obviously, you know, in rand value, because you have to prorate. So it's going to be 1 divided by 21 times whatever the incentive would have been. But still, the point is you don't have to have that person with you now for the rest of your life. You can have a fixed term contract, or you can have a very short term duration, like a week, a month, a year, you know, whatever the case might be. All right, so I don't want to get too bogged down in that. I know it is quite a contentious area, but people are making use of the incentive, and so far it seems to be working. So yeah, but of course I don't think there's any SARS verification happening just yet. I think that's still going to roll out, and of course that could become a bit of a nightmare in terms of the admin. It depends on your record keeping system and what type of payroll system you have. All right. Some of the other changes that became sort of alive in 2014, in fact this one I've put in here because it was in the 2013 amendments, but actually it was effectively backdated to the 1st of March 2013. So it's really just expanding the exemption for bursaries. And you will already have seen this coming through. So just make sure that anybody who has received a bursary from their employer, if they are eligible for this exemption under the new rules, just make sure that these RP5s that are coming out for the end of February 2014 properly reflect this, because I do fear that some of the employers might not have been aware that this exemption was backdated to the 1st of March 2013. Okay. Then, of course, low-cost housing. This idea is to give a relief from fringe benefits tax if the employer sells a property to the employee. Now, in the ordinary course of events, under the 7th schedule, there would be a fringe benefit that arises if the employer sells an asset to the employee at less than market value. So if you had an asset with a market value of 300,000 Rand and you said to the employee, right, I'm going to sell this to you for 200,000 Rand, there would be a fringe benefit of 100,000, right? But the issue is, and this is where paragraph 5.3a, subparagraph 3a says there's no value on that fringe benefit. So yes, there should normally be a fringe benefit, but there's no value if you're selling a property to an employee who's earning not more than 250,000 a year, and the market value of the property is not more than 450,000. So it does give a bit of leeway for you to transfer property to employees without the employee sitting with this massive amount of tax. Because you can imagine if you were selling a house, market value 300,000, sell it for 200,000, 100,000 Rand tax at the employee's marginal tax rate, you wouldn't have a very happy employee on your hands. Even though they've got a house, to sit with that additional tax liability. So it does give some relief to transfer home ownership without additional tax liability. There's a little example in there, but it really follows along what I was just saying. On the donations deduction, now the Section 18A deduction, of course, allows you to deduct donations to a public benefit organisation. It's a long-standing deduction. The key requirement is that you have to have a Section 18A certificate. Yes, that's still a requirement. But up until now, your deduction has been limited to 10% of taxable income, and if you actually had donated more than 10%, you would simply lose that excess. You couldn't carry it forward. For years of assessment commencing on or after 1 March 2014, you will be able to carry that excess forward. So if we have a look at my example over here, if I said I've got a taxable income of R1,000,000, 10% is 100,000. If I actually donate and I get 18A certificates for 150,000, that excess of 50,000, as long as year 1 is a year that started on or after 1 March 2014, I would be able to carry that excess forward. So just be careful, it's not helping you for these year ends that end at end of February. No carry over there. Only for the years starting 1 March 2014 going forward, then you'll be able to carry it forward going, into the future. And then this change over here, I'm just putting it up here to highlight. I'm not going to get involved in hybrid debt instruments, etc., because this really is now cutting into our sort of structured finance, very much corporate tax rules, which we don't really cover in our practitioner update. But just to highlight that we have got these amendments to Section 8F and 8FA, and it talks about recharacterizing the yield as a dividend in specie for both the payer and the payee. So here at least we do see that sort of fair aspect of characterizing it on both sides. And this is for amounts incurred or accrued on or after 1 April 2014. So just to remember those amendments coming into effect. There is an exemption for small business corporations and various other people. And then also a little bit technical, but we'll just get through it pretty quickly, is this limitation of interest deduction on acquisition debt. And this is really talking about your intergroup transactions, where the issue is that if you raise debt within a qualifying transaction, the deductibility of the interest on that debt comes into question. Now, Section 23 capital K allowed, well, it sort of said you can't deduct the interest except in certain circumstances, and it had certain subjective rules where SARS could approve the deduction of that interest. Then it was decided that we need to have more objective rules. 23K was always an interim measure. It was never intended to be there in the long term. And it has now been replaced by Section 23N. So all that this does is it gives you a more objective determination of what is the maximum amount of interest that you can deduct. And you'll see the key is that the interest is pretty much limited, we could say in simple terms, 40% of taxable income. It talks about 40% of adjusted taxable income of the acquiring company. You can bump that up if you've got interest received, and you'd set it off with other interest on other debt other than your acquisition debt. But if, for example, let's just take a simple example, if a company had a taxable income of R1,000,000 and it had entered into an acquisition transaction costing 50 million, so it raised debt for 50 million, and let's say it was paying interest at 10% per annum on 50 million. So the company is looking at claiming a tax deduction of 5 million rand a year. Theoretically, if you were able to cross all the hurdles, you would then, of course, wipe out your taxable income. So you take R1,000,000 taxable income minus 5 million rand deduction, wipe out your taxable income, create a huge loss that would make sure you don't pay tax for the next few years. So the idea is to say Section 23N, now of course again there's certain requirements that have to be met, etc., to get the deduction of interest, but then you would be saying I can only deduct, although I've got interest of 5 million rand a year, I can only deduct up to 40% of that taxable income of R1,000,000 rand, 400,000. And the rest is disallowed for 5-year period. So it's quite a restrictive provision, and what it's intended to do is that it's intended to protect the tax base, to make sure that we're not having our tax base wiped out with massive interest deductions. And some of these interest deductions run into huge numbers. We'll talk about the MTN case a bit later on, but there we had interest deductions running into hundreds of millions of rands, and that's just talking about effectively the disallowed portion. So there is an example, basically a repeat of what we had in November. I'm going to just jump past this because I don't want to get too bogged down in that. Let's go.